Happy Sunday, everybody. This is Mornings with Michael. This is our weekend update. Our word of the day is apopodictic. Apopodictic, clearly established or beyond dispute. The head surgeon had an apopodictic knowledge of human anatomy. And there we go. Let us go to our PowerPoint presentation. So here we are. This is the Dow Jones Industrial Average. I'm just going to pull up targets. Our target for Dow Jones, you can see that even though the selling has declined a little bit, our stochastics and CCI are still heading down, and there's still a big gap above the moving average. So those are some of the key indicators. And we have a target of 395.69 on the Dow Jones. On the IWM, even though selling is going down, we have pretty much the same kind of this red line. 208.58 is our target. Initially, I believe it was over a week ago, we said the target would be right around this area. So we're kind of keeping that in line. The stochastics are heading down, and the commodity channel index are heading down as well. And we're a long way above the moving averages. So that is a reason for that pulling down. So this is a NASDAQ. NASDAQ is under its moving averages right now, had a lot of bout of selling. It has declined a little bit. We think just being under the moving average is going to bounce, kind of hit its head up here. And the target on the NASDAQ is hit our down target right over here at 476.81, and I think it's going to hit up to 483.65. And now we can take a look at on the monthly chart. Hit this target up here, and then we got shooting star. Well, what happened last time there was a shooting star on the monthly? And just look over here. It headed down for a long time, came under the moving averages before it was able to break up. So I think that similar pattern could be in order for the NASDAQ. You can see on a monthly basis, it's high above the moving averages. Buying has really moved off, and it looks like we're about to head down. It's head down already on the commodity channel index, the momentum lines. So that is the story there. Here's a 5-day performance spread between the NASDAQ and the Russell 2000. The Russell 2000 had some outperformance recently. This is the biggest outperformance since 2020 over here. And it's been 2.5 years since it's hit a new high, and I believe it has hit a new high, and I think it's going to retrace a bit. It goes up and it pulls back, and it goes up, and it just cannot get any forward momentum on a long-term basis. Now we move over to the S&P 500, hit the target up here, pulling back to the moving average here. I think it may have a little bit of a bounce here, and our target for the S&P is 527.07. It looks like it's coming down to the bottom. I think there's going to be a hinge on the commodity channel index, and the same on the stochastics. Even though selling has been pretty strong here, 3 days in a row. And let's go take a look at the monthly. The monthly is very similar to the QQQ or the NASDAQ. Got a shooting star as it hit its the long-term target up here, and buying has really dropped off since then. So that is the story there. Let's go take a look at the VIX, or volatility index. I think there's going to be a pullback, more than hit our target up here. Long-term target on the VIX is 1838. Our short-term target was 1362. It went way past that. It went up to, I believe, 1680. Closed at 1654 on Friday. You can see it's starting to hinge on the stochastics, and the commodity channel index is already headed down. So that is the story there. Here is a look at the 10 mega cap aggregate. They have come below their moving averages. You just can go on Thinkorswim and put a plus in between the ticker symbols, and this is how you can get this. This is NVIDIA, Microsoft, Apple, Meta, Google, Berkshire Hathaway, Eli Lilly, Amazon, JP Morgan, Broadcom on a 1-year time frame. So they came onto the moving averages. I think they may try to come back, but the moving averages is going to continue to kind of roll over and decline. And we kind of feel that they're going to hit their head up here. They are going to probably bounce. As you can see, the selling has really dropped off right here. So that is a story on the big cap tech. CrowdStrike really got a black eye on Friday from Microsoft outage and a number of industries that they affected. Airlines, financials were the strongest hit, but will likely take a hit, and I'm sure there's going to be a number of lawsuits. Based on this, it just doesn't seem like they tested enough on their update. So that's the story with CrowdStrike. Right here, these are fan lines. Fan lines right over here. If stock crosses below this fan line, there's a 90% chance it's going to continue to decline. Once it crosses this fan line, there's an 80% chance it's going to continue to decline. And this fan line, there's a 70% chance it's going to continue to decline. So that is kind of the story with CrowdStrike. Kind of hit right over here. We'll see if it continues down. And let's keep moving on. Here's the effective federal funds rate. Everybody is talking about the interest rate being dropped, so be careful what you wish for. This is kind of showing what happens when they drop the interest rates, how the stock market reacts. Here's a 1987 crash, long-term capital management, the tech bubble in 2000, interest rates dropped, and look where we went here. 2007, same thing, subprime crisis. Here's COVID, and 2023 U.S. regional banks are suffering because interest rates are so high. So it looks like things are kind of softening. There's a number of people out there calling for big bear market. We had bear market in 2020 and 2022. So some people are saying it's unlikely that we'd have another one, third one in 4 years, but anything can happen in the stock market. This is showing the highly concentrated equity market, often associated with problems. There's a recession, and I believe this is 91. Pull back here. Here's a bubble of 2000, which we just looked earlier. And here's the financial crisis, 2007, 2008. Came back here. And here we are in 2020. Big pullback there. And then this is in 2022, this bear market. And here's where we are, right again, highly concentrated in very few companies. Will it roll over again? That is a question to be determined. Tech stocks haven't accounted for this much of the S&P 500 since the early 2000s, and we know what happened back then. So it has just screamed past this area in 2000. Where we will go next is a big question. This was something on Market Surge. Found It was written up in the Financial Times. People are having these huge valuations, especially for NVIDIA. They're predicting earnings of $1,350 per share, free cash flow of $1,000 a share, could translate into a market capitalization of 49 trillion. The writer Anderson put the probability of this type of outcome of 10 to 15%. And generally, you don't see this type of excitement and increased valuations at the beginning of a run. So it's either the middle to the end, or we could possibly be at the end with this overexcitement in AI. So that is the story there. And then this S&P 500 is incredibly dangerous. Why Warren Buffett's favorite valuation indicator is flashing a warning for stocks. The Buffett indicator is indicating US stocks might be overvalued. His indicator it has hit an all-time peak of 200% on Monday, surpassing the record high of 197% reached in November 2021, and that's at the point when stocks kind of rolled over. Started with NASDAQ and S&P 500 rolled over. The smaller cap stocks had a warning in February of that year. So that is the story with our PowerPoint. We're now going to go look at if you're at all concerned about this, it might be a good place to transfer some of your money at least, as it only goes up, does not go down, goes up when the market goes up, and beats index investing by about 5% per year. And there are bonuses out there anywhere from 10 to 45%. If you would like to learn more, please send a comment. And now let's go to our screens. We are kind of scanned a number of stocks that were up when the market was going down. Here's Zeta, operates a cloud platform, provides enterprises with consumer intelligence. It's a little bit extended right here. You can see had a number of institutional ants right here. Generally happens at the top, pretty close to the top, and then it pulls back, and then it takes off again. So this is a pivot here. It was up 1.33% on Friday. And road construction provides construction products. It's up a little bit. It's working on, looks like a, double bottom base. 59.49 is a breakout. So we'll just see where that takes us. It takes us down. New holdings came up to this pivot area, pull back to the 20-day moving average, and then it's just been riding the 10-day moving average moving forward. It's up 2.75% on Friday. Robinhood, with Bitcoin starting to do well again. This is bounce off the 10 and 20-day moving average, up 2.54%. The same vein, we got Coinbase, working on consolidation here, kind of a Darvas box, bounced strongly off the 10-day moving average, up almost 11%. The health area, Vertex Pharmaceuticals, kind of pulls, we've got a double bottom here, 406.97 undercut, and it breaks above. So I would say this would have been the buy point right about there. And it just continues up. Could have added at the pivot right here. And now it's just following its 10 and 20-day moving average as it moves up 0.71%. got Guidewire Software. Went above its pivot, just keeps moving on up, just riding that 10-day moving average up about 1%. Hort Therapeutics, once again in the health and biotech area. Pull back here. Didn't pull back as much. Came close to the 50-day moving average again, and is up 1.77% Friday. One of my previous finds a little over a year ago, BLTE, found this around 22. Had a nice consolidation, pulled back to 31, a double bottom, and breaks above its double bottom right about here. And here's the pivot, pulls back to its 50-day moving average and bounces, is up 3.45% on Friday. Mirum Pharmaceuticals, once again in healthcare, had a pretty strong move, up 5.67% on Friday. And moving into the oil and gas area, Weatherford had a nice bounce off the 10-day moving average, up 0.52%. And then FTI, another British oil and gas company, up 1.85%. Environmental area, GFL Environmental. I like this just because I like the base. This kind of keeps moving up. We got the institutional ants over here, buying right about here. We'll see if it gets up to its pivot area. Apodictic Holdings, gas gathering compression processing, a pretty nice move out of the pivot area, up 2.29%. You can see at this little breakout, pull back, we got a base on base, it breaks out here at the pivot. It is a little bit extended, so I kind of watch that right now. This is Lincoln Educational Services. We got a couple of companies that are breaking out to the pivot, up 1.5% Friday. Looks like we got a base on base pattern. And you could call it a cup. We'll just see if it provides a handle or not. That's a nice move. Back to the oil and gas, VNOM. Worked in on a base here. Continues to get buying. All these blue bars in here. And it's at the top of its pivot, up 1.37%. And this is AI and healthcare, kind of merging two popular items. Has been an IPO. It's really not an IPO base anymore. It's too long because 2 to 4 weeks is the time frame for an IPO base. But we'll see if it can break out here. Doesn't really have any earnings projections yet, so that is the story. Finally, in real estate area, there was a number of REITs that showed promise. This is Redfin. Looks like we got a cup with a handle base, pulls back into the pivot area. This is another one to kind of put on your watch list. So that's our weekend update. Hope everybody has had a great weekend. And we look forward to seeing you tomorrow, Monday morning. And in the meantime, go out there and have a great weekend with your family and friends. Mornings with Michael is for information and educational purposes only. It's your responsibility to do your own due diligence.